Bismillahirrahmanirrahim. This is ARD, your accounting coach. Today's topic is bank reconciliation statement. Now, before going on to reconciliation statement, we will be discussing what does the word reconciliation actually means. To reconcile means to compare or to match. Now, what are we trying to compare or match? We are trying to match or compare our bank balance. See, for instance, I have an account at the bank, and according to me, I have balance of $100,000. According to me means in my records consist of cash book. According to my record of my bank account, I have 100,000 rupees, $100,000 in my bank account. So the bank, according to the bank, the balance should also be the same. It should be 100,000. If I call the bank and ask them that what is my account balance, they should tell me that your balance, sir, is your balance is $100,000, because my account is being operated at the bank, the record of whom is also kept by me in my cash book, and the record is also kept by bank in bank statement. The record that bank has with himself or with themselves is comprised of, they say it as a bank statement. They show my balance in the bank statement, and I keep my records in cash book. You must have also learned that cash book is basically 2-column cash book or 3-column cash book. In a 3-column cash book, there are 3 columns, one for cash in hand, one for cash at bank, and the third column is for discounts. Now, in this topic particularly, we are not interested in cash in hand and discount columns. We are only interested in bank columns. So we'll be worrying about bank balance. So what balance I have at the bank in my records should also be the same, as well as in the bank records it should be the same. But there are situations in which the balance that I have in my bank is something else, and the bank is saying that my balance is some other. So if there is some difference in the bank balance between two of us, it should be reconciled and it should be matched, and for the particular reason we study bank reconciliations. I hope you are getting the point till yet. Now another thing we need to discuss is that our bank account is an asset for us. If I have $100,000 in my bank account, I will be showing this as a debit balance, because this 100,000 is an asset for me. But at the same time, if I'll call the bank and ask them about my balance, the banker will say that, sir, your balance is 100,000 credit. I'm saying this, that my balance is 100,000 debit because it is an asset for me, but the bank is saying, sir, your balance is 100,000 credit. Now why is that? Because the bank balance is an asset for me, but the same bank balance is a liability from the bank's perspective. For bank, it is a liability because this is my money that is kept in the bank, and bank is obliged to return the money back to me whenever I ask the bank for it. Okay? So my bank balance is an asset for me. I'll be showing it as a debit balance, and the bank will be displaying it as a credit balance because it is a liability for the bank. Now, what I will be doing if I'm taking out money, withdrawing money from my bank, I will be crediting my bank account. What entry will be made by me? Cash account debit, cash in hand or cash debit, and bank account will be credit because the asset is decreasing. As you are already aware, the nature of the asset is debit. Whenever an asset increases, it is debited, and whenever an asset is decreased, it is credited. Now, what will be the bank doing? I will be receiving a SMS from the bank, message from the bank that, sir, your account has been debited by, for example, 20,000. I am withdrawing money maybe through ATM from my bank, and I am crediting my bank because I am crediting my asset. What message I am receiving from the bank is that, sir, your account has been debited. Whenever I withdraw money, I credit my bank balance, and the same time bank debits my account. Why bank is doing the opposite? because it is a liability for the bank. The bank balance is an asset for me or some other user whose money is kept in the bank, but for the bank it is a liability. Whenever we withdraw money out of the bank, the liability of the bank decreases. Thus, the bank always debited your account. See, whenever I am receiving messages from the bank that my account is credited, so it is a good news for me because my account balance is going up. And whenever I got a message from the bank that my account has been debited, this means it is a bad news for me. Bad news for me. Why? Because my bank balance is going down. So I hope students, you can appreciate till now that there is the opposite thing going on in the bank. Whenever I debit my account, bank credits it, or vice versa. Now let's move forward. In any bank reconciliation question, we need to do two things in the exam. Firstly, we need to make an updated, revised, or amended cash book. This is the same thing. There are three different words used by the examiner. The most common word is updated cash book. Then it can also write revised cash book in some other streams, and it can also write amended. This means the same. Now, what is an updated cash book? Updated cash book is also known as updated bank account. Updated cash book means, as you are already aware, we have a account in the bank of record of which is being kept by us in the form of cash book. Now, why do we need to update our cash book? We need to update our cash book because there are some transactions in our bank, plus or minus, that have been performed by bank, but they are not yet recorded by us. Why haven't we recorded us yet? Because we are unaware of the transactions that have taken place in our bank account. So as soon as we are aware of the transactions and we got to know that these transactions have been passed in our bank account, we will be increasing or decreasing our bank account. Let's start with balance BD. As you are already aware, balance BD is opening balance. BD stands for brought down, that is opening balance, balance BD. If our bank is in positive, this means if we have money in the bank, the balance will be debit balance. Or if our bank balance is in credit, means we are operating at an overdraft. What does overdraft means? Overdraft means that we have taken out more money from our bank than actually the balance that we has. So how is this possible? Can we take out money more than that we have at our bank? Yes, there are some scenarios in which the bank allows us a short-term credit. Let's take an example. If I'm being a customer of the bank for past couple of years and I have some good reputation and rapport built by the bank manager or branch, therefore bank will allow me some sort of credit. Means if I have money in the bank 100,000 and if I want to take out 120,000, I have to go to the manager and request him to give me an overdraft of 20,000. Means right now bank will be willing to pay me 120,000 and later on I have to pay back the bank 20,000 that I have withdrawn in excess of my original balance. That is known as overdraft. Overdraft is a liability. Asset appears on debit side, liability appears on credit side. Now let's move to the transaction. Traders credit or transfer. These are some sample transactions that are mostly being tested in exams. Traders credit or transfer. Traders credit, what does this mean? Some trader or some party deposited money in our bank account directly and we are unaware of it. As soon as we got to know that money has been came to our account, we will be debiting our account. See, bank has credited our account, traders credit, the name is traders credit. If the bank has credited our account, what we will be doing, we will be doing the opposite, we will be debiting our account. Interest credited. Now, what is interest credited? See, if we have an account, there are two types of bank accounts. One is a normal account, which is known as current account here in Pakistan, and in some other countries, UK, it is known as a checkings account. Now, what is a checking account or a current account means? Current account is an account that is used for regular day-to-day transactions, and there are some accounts that are not used for regular or day-to-day purpose, such as if I have money in excess of my requirements and if I want to save that money, I'll be opening a savings account or a deposit account. And on that deposit or savings account, bank will be paying me interest or profit. So whenever I'll be getting interest, I will be debiting my cash book. The bank has credited my account, but I will be debiting my cash book. The opposite again. Dividend receipt. What does dividend means? If I've invested in some company in the form of shares, I will be getting returns from on my investment, and the returns are in the form of dividend. So if I'll see my bank statement that I've received dividend for this year, but I haven't yet updated my records, I will debit my cash book. Debtor paid directly. Debtor, as you are aware, debtor is our customer whom we have sold goods on credit. Whenever our debtor has already paid us, we will be debiting our bank account. Debtor paid directly. Now let's come to the credit side, direct debit. So let's illustrate this direct debit with an example. Some electric company here in Karachi, it is known as K Electric, or in your city, I'm not sure what's the name. Some electric company sent me a bill for monthly bill for electricity consumption. So I called them and told them, don't you ever dare to send me bill again. So the guy on the phone was frightened, and he said, sir, are you some sort of underworld, or who are you? Are you a mafia or what? So why aren't you paying the bills? So I told him, dear, I am not some sort of underworld guy. I am not some sort of don. I am just requesting you that I don't have cash with me in my home, and you can directly send the electricity bill to my bank, and bank will pay you whatever amount I owe you for the electricity consumption. When I got a statement from the bank, the statement showed that this month's electricity bill has been paid. So what I will be doing, I will be crediting my cash book. See, the bank has debited my account. So what I will be doing, I will be doing the opposite. I will be crediting my cash book. Now standing order is also somewhat similar. Let's show you with this an example. I saw a bike that I like much, and the bike costed maybe $120,000, and $120,000 is a huge sum. I don't have that sort of amount in the cash. So as you are already aware, teachers are not much paid in terms of their salaries. So what I did, I wanted to buy that bike. So I bought that bike on installments. So I asked Honda company to make an installment for this bike, maybe 120,000, 12 months installment, 10,000 installment per month, EMI, equal monthly installment. Now the Honda guy came for the first man, asked for me, sir, what about the installment? I am here to collect my $10,000 for the bike that you bought on installment. So I told him, don't you ever dare to come to my home for payment. So again, this guy is frightened, sir. Are you some sort of underworld guy or what? Are you a terrorist or what? So I told him, no, dear, it's not something like that. The problem is that I don't have cash right now at my home, and I never keep this much amount of cash in my home. What I am doing, I am requesting my bank to pay $10,000 at maybe 5th of every month to Honda company. So this is known as a standing order. So what is the difference between direct debit and standing order? Direct debit is to different parties. Maybe sometimes it is an electric bill, sometimes it is a gas bill, sometimes it is water and sewerage bill. And standing order, it is the same payment every time to maybe, for in my example, Honda company. Direct debit amount is sometimes different. The electricity bill, sometimes electricity consumption is more, sometimes less, depending on the weather. And the standing order, the amount would be the same. So in direct debit, everything remains, everything changes, it is variable. And standing order, party, amount, date, normally everything is the same. But essentially both are the same nature of transaction. Bank charges, bank gives us many types of services, which is known as a checkbook and debit card and credit card and demand draft. These all services bank does not give in good faith, or maybe for our prayers. Bank give us for to earn money, and the bank earns money in the form of charges. So bank charges are always deducted from our cash book. And then is interest charge. If I've taken some sort of loan from the bank or maybe an overdraft, I have to pay interest on that loan. The amount due, it is known as interest charge, or it is also known as interest debited. One is interest credited, that we are receiving the interest, and one interest debited, that we are paying to the bank. Dishonored check. What does dishonored check mean? Dishonored check means whenever we receive check from the customer, we debit our bank and we credit our customer, that is an asset. Bank debit and customer credit. Then suddenly we came to know that the amount that we have received in the form of check, the check has been dishonored. Dishonored means the bank has not honored his or her check. Why has bank done that? Because the most important reason is that the bank does not have, the customer does not have enough balance in its bank account. It is short of balance, the balance is insufficient. Another term that bank use, it is referred to drawer. So if the check comes back to you from the bank and it is written referred to drawer, means the check has been dishonored. There can be n number of reasons. The most obvious reason that the customer who has given us the check does not have enough amount in order the check to clear. Secondly, there can be a date problem. The date is maybe 31st February, which does not exist in practice, or maybe there is overwriting on the check, or maybe the amount in words and amount in digits is different, or maybe the check has been expired. The check lasts for 6 months, and if we try to cash a check after 6 months, this is dishonored. So what we'll be doing, essentially we'll be reversing the transaction. Firstly, when the check arrived, we debited our bank and credited customer. Now we'll be crediting our bank and debiting the customer again. This is known as dishonored check or unpaid check. And the short side will be balance CD, and the next period it will be balance BD. So this is the updated cash book, and then we'll move to bank reconciliation statement. After updating our cash book, the second step is to make a bank reconciliation statement. Bank reconciliation statement has two formats. The most common one is starting with balance as per updated cash book. Now, where does this balance as per updated cash book come from? This comes from updated cash book. We have already updated our bank account or cash book, and the balance BD, we have already calculated it. The balance BD comes here as balance as per updated cash book. If the balance BD is on debit side, this means this is a positive balance or balance at bank. If our balance BD is on credit side, that is, it's an overdraft, we will be writing it as a negative balance, which will be showing with the help of a negative sign, or most commonly as brackets. We'll be using brackets in balance as per updated cash book. Now see, when we updated our cash book, in our updated cash book, the transactions that we considered were the transactions that were already recorded by bank, but were not yet being updated by us. So what we did, we updated our cash book for transactions that were missing in our cash book. Now in BRS, in bank reconciliation statement, we consider transactions that are coming, that are already recorded in our cash book, but that they are not present in the bank records. Mostly or commonly there are two items. One is unpresented checks. Now let's see, what does unpresented check mean? Unpresented check means, my dear students, that we have issued check to our suppliers, but for some reasons the suppliers has not presented this check to bank for payment. Why? Because supplier may have forgotten that he have received a check from us and he forgets to cash that check. Secondly, it may be he remembers that he have received a check from us, but he is busy somewhere else. He did not get the time to check our cash. This is known as unpresented check. Now see, if whenever we pay our supplier, we make a transaction that will debit a liability. Liability is decreased when debited, will decrease the liability by debit, and will decrease our bank balance as a credit. Liability debit and bank credit. Whenever we are paying our supplier, we'll be crediting our bank because our asset decreases, but when we reconcile our bank statement, we add back this as an unpresented check. Why are we adding it back? We are adding it back because as per our cash book records, the money has been paid to the supplier, but as our bank statement records, the money has not yet been paid. Therefore, we are adding up the transaction so as to match our balance. So this is unpresented check. Unpresented check is very simple. For example, we have given check to our supplier, because he was asking for it every now and then. He was calling us and asking us for check. So somehow we managed to pay him the check. But what came as a surprise to us, that after 15 days, when we were looking at our bank statement, we realized that the supplier has not yet cashed our check. He has not yet presented this check to a bank. So we called a supplier and asked him, what the hell is wrong with you? He said, I am perfectly fine. What is the problem? So we said him that you are asking for check for such a long time, and then if when we have given you the check, you have not yet presented this check for payment. So he said, I am on vacation, I am in foreign country, and in that country the bank does not exist and there are no branches of this bank. So whenever I'll come back soon in a week or while, I'll first directly from the airport will go to the bank to cash that check. So this is unpresented check. Now, what is uncredited lodgement? Uncredited lodgement is means we have received a check from a debtor, our customer, and we have deposited this check to our bank. So whenever we receive a check from the bank, we will from the customer, we will be making an entry as bank debit and customer credit. We will be crediting our customer and we will be depositing this check to bank. According to us, we have received the money, but what happened? The check was from some other bank. So therefore, if you deposit a check of some other bank into some other bank, this means the bank will take 2 or 3 working days as a clearing process. For example, the check is of Standard Chartered Bank and you are depositing it in Barclays Bank. So does the Standard Chartered Bank check cleared in a Barclays account immediately? No, it takes 2 to 3 working days. So according to us, we have received a check from our customer, our bank increases immediately, but according to our bank records, the check has not been credited. So what we'll be doing, we'll be deducting it. Why we'll be deducting it? Because firstly, when we have received the check, we have debited our bank records, we have increased our bank balance. As per our cash book, the check has been cleared, but as per our bank records, the check has not yet been credited. It is in the process. It will take 2 to 3 working days to clear. So we will be deducting this just to see as our records and bank records are on the same page. So what is the final balance? Final balance is balance as per bank statement. So either this balance is right or wrong. How do we know this? This balance as per bank statement that we have calculated from this reconciliation statement would always be given to us in the question, in the exam question. If this balance and what is that is already given to us is matched, this means we have done the question successfully and will be getting full marks, inshallah. So this was the bank reconciliation format. One last thing I'd like to tell you, that this bank reconciliation, sometimes the examiner does not give us format, so we are free to use this format. But sometimes how examiner tricks the students, examiner automatically or already gives us the format in the exam. This format is printed. But what is the problem? The problem is that the format that examiner has given us does not start with balance as per updated cash book. Rather, it starts from balance as per bank statement. The examiner starts the format of BRS, bank reconciliation statement, from balance as per bank statement and ends it as balance as per cash book. Now what we have to do? We have to do the reverse working. If we are starting with balance as per bank statement, we will be adding the uncredited lodgements and we will be deducting the unpresented check, and the final answer is balance as per updated cash book. So if this balance as per updated cash book is the right balance or wrong balance, how would we know that we have solved the question correctly? We will be comparing this balance as per updated cash book with this balance BD. If this comes as a positive balance, the balance BD should be on the debit side. Or if the balance as per updated cash book is coming in negative, this means as a negative balance. So this would be balance BD as an overdraft. So now you are aware we can do reverse format as well. If we are adding unpresented, we'll be deducting it, and if we are deducting uncredited, we will be adding it. So finally, I would tell you what is the concept underlying this, why we are reversing the concepts. See, if we are starting from balance as per bank statement, why are we adding uncredited lodgements? One more question comes into mind right now, is that see, there are many balances here, so this is a bit confusing. We have three balances. I would like to ask a question from you. If we are making a balance sheet, that is statement of financial position, what bank balance we will be using? uh, One option is that we'll be using balance BD as per cash book, that is balance before updating our cash book, or the balance that we are using after updating our bank account or after updating our cash book, this balance BD. Or lastly, the third option is we'll be using balance as per bank statement as a bank balance. I may repeat the question again. If we are making a balance sheet, first of all, does a balance sheet consist of a bank balance? Yes, a balance sheet always consists of a bank balance. If we have money in our bank, we'll be writing it in current assets. And if we are owing money to bank, that if our bank is in overdraft, the balance will be showing on as current liability. So which balance will be using in our bank statement? You may take some time, pause this video and ponder on this point, that what bank balance will be using in our balance sheet. There are three options. One is balance BD before updating the cash book. Second is balance BD after updating our cash book, that is updated cash book balance. And third one is balance as per bank statement. If you have guessed the question correctly, it's good. But if you have guessed the question incorrectly, most of the students' answer to this question is a balance as per bank statement. This balance as per bank statement is not the correct balance. Why it is not a correct balance? Because there are two temporary items or temporary adjustments need to be made. Now we are using the reverse format. I would like to explain the rationale behind this reverse format. Now what is this? If the bank is saying your balance is balance as per bank statement, we are adding up this. This is not the correct balance. Why? This is not the correct balance. Why? Because this uncredited lodgement, what was it? I previously explained it to you. Uncredited lodgements is a check of the customer that we have deposited into the bank, but it is not yet being credited. Why it has not been credited? Because the check has not been credited by the bank. So tell me, if the customer has money in its bank account and the bank the check is of some other bank, that we have account in Barclays and the check is of Standard Chartered, the check has not cleared yet. But will it be cleared in 2 or 3 working days? Yes, definitely. If it will be cleared, we'll be adding up this balance. Because why? Because this check will increase our overall bank balance, therefore we are adding it up. Unpresented check, what does this mean? Unpresented check means that we have given a check to a supplier, we have issued a check to the supplier, but the supplier has unable to present this check to the bank for payment. Why? Because he may be busy, or he may does not need the money right now, or maybe he have forgot to present this check to the bank. But sooner or later he will remember this, and he will need money, and he will be free, and he will come to the bank for payment. If the supplier presents this check to the bank, sooner or later this money will be deducted from our bank account, and we are left up with this balance as per updated cash book. So this is the real bank balance, that is balance as per updated cash book. So I hope I was able to explain you this topic. If you like this video, please, I apologize for my incorrect English if you think I have made some grammatical errors, because English is not my native language. I'm just started making lectures in English for you guys. So if you like the video, if you think this is helpful, and this I was able to explain you bank reconciliation, kindly share this video with other accounting students, and do comment how I can improve it further. And don't forget to subscribe my channel with the name of Ahmed Raza Dharolia. Jazakallah. Allah Hafiz.